Okay, so you've sent us quite a stack of sources here, absolutely packed with what's been going on in the crypto market.
Yeah, things are moving fast.
Definitely.
Hmm.
Bitcoin hitting these, well, dizzying new highs. Some really surprising moves from altcoins, too.
Hmm.
And then these big sort of structural shifts happening out there in the wider global economy that seem to be, making waves right here in crypto.
That's right. It's a really dynamic moment. You can see the market navigating some pretty significant forces, both from within crypto itself and definitely from the external financial world.
So this deep dive, it's all about taking those articles, those notes you shared, and just pulling out the most important insights, the key nuggets.
Exactly. The goal is really to cut through all the noise, try and understand what's actually driving these trends, look at the data we have,
Right.
and help you figure out what all this means for, the crypto landscape right now.
Okay, let's dive in then. So looking at that overall market snapshot you provided first, there's definitely a feeling of risk sentiment bouncing around a bit,
Yeah.
fluctuating.
Yeah.
But the overall crypto market cap is pushing higher. That's notable. Your sources have it sitting around, what, $3.45 trillion?
Mhm.
Recently, up about 2.5% over 24 hours.
That overall number, it does give a sense of the positive momentum lately. Even with some of those underlying uncertainties, investors are clearly, weighing up.
And right at the heart of it, obviously, is Bitcoin. Your sources highlight BTC trading around $109,000.
Yeah.
And that's after smashing through to a brand new all-time high, $110,797.
Incredible number.
It really is. And just looking at its 24-hour range,
Mhm.
bouncing between like $106,600 and $110,200,
Yeah.
tells you there's been some serious price action.
And what's interesting is most of the other major cryptocurrencies, they've been following Bitcoin higher. The notes you sent, they pointed out some notable outperformers too. Yeah, like AIXBT, that was up 24%. PXL saw a 19% gain, and Digo was up 18% pretty recently.
Okay, so some strong individual moves, but here's a fascinating counterpoint. You included the Altcoin Season Index.
Ah.
Your sources mentioned it stands at 27. Now, for anyone who tracks this, that number, it definitely indicates the market is still very much leaning towards Bitcoin dominance right now.
Exactly. Despite those individual pops we just mentioned,
Right.
it suggests we're not seeing that broad market-wide altcoin surge just yet. Bitcoin is still, the main magnet for capital and attention.
Okay, so let's really lean into that Bitcoin story then, especially that new eighth. I think the question on everyone's mind is, why now? What did your sources point to as the main driver here?
Well, what really jumps out from the material you provided is the direct connection being made to those sustained inflows into the U.S. spot Bitcoin ETPs and ETFs.
Ah, the ETFs again?
Yeah, I mean, it's not exactly a new trend, but it's really reaching a significant scale now.
So undeniable institutional momentum, basically.
Precisely. Your sources highlighted this marks the 6th consecutive week of inflows into these products.
That's this week? Wow.
Yeah, totaling a massive $10.5 billion in just this recent period alone.
Okay, 10.5 billion.
And the cumulative net inflows since these things launched have now reached an astounding $43.4 billion.
43.4 billion cumulative. That's just incredible scale. They even specifically called out BlackRock's iBit as being a key player in soaking up those funds.
It's been a huge recipient.
And the sheer volume, I mean, year-to-date, digital asset products overall have seen record inflows of $10.8 billion, with the U.S. market pulling in $3.2 billion in just the last week reported.
Right, the U.S. is definitely leading the charts there. And that influx has pushed the total assets under management, specifically in the spot Bitcoin ETFs, past $104 billion.
Over $104 billion AUM.
Yeah, hitting a new all-time high for that whole category. This isn't just, money dipping in and out. It feels like capital finding a home.
And an interesting contrast noted in the sources,
Yeah.
comparing that to gold ETPs, which have actually seen outflows recently. Your material suggested this could indicate maybe a potential shift in institutional preference, perhaps viewing Bitcoin more as an alternative or maybe a complementary store of value asset.
It certainly raises that really important question about how these large pools of, traditional capital are starting to reevaluate their asset allocation in this current environment.
Yes, speaking of that environment, your sources didn't just stick to crypto metrics, did they? They really zoomed out to include the broader economic picture.
Right.
Why are these macro events suddenly showing up so prominently in, crypto news feeds?
Well, fundamentally, it's because they're influencing investor behavior and confidence across all markets, not just crypto.
Okay.
So when you get significant stress signals or shifts in the broader financial system, investors naturally start looking at things differently. And that includes exploring alternative assets or maybe assets they perceive as uncorrelated.
Right. Makes sense.
Right.
And one major piece of news highlighted was the U.S. credit downgrade.
The Moody's action?
Yeah, dropping the rating from AAA to AA1. That was significant, right? Because it removed the last AAA rating the U.S. had from the major agencies.
It was. And your sources, they frame this as signaling, increased concerns about the nation's fiscal health, the sustainability of its growing debt load.
And the potential implication.
Well, the discussion is that this might prompt some investors to reassess their exposure to dollar-denominated assets, maybe look for perceived stability or diversification elsewhere.
Okay. And tied into that whole fiscal picture, your sources also pointed to rising bond yields.
Yeah, that was another key point. Surging yields in the U.S., the 30-year touching 5.15%, the 10-year around 4.48%.
In Japan, too, notably.
Exactly. Japan's 30-year hit 3.1%, which is its highest in decades. This is often read as discomfort or stress in those traditional bond markets.
Challenging that safe haven status they've held for so long.
Precisely. Your material also connected this back to the sheer scale of U.S. national debt, now over $36.8 trillion, and the rapidly increasing cost of just servicing that debt, projected at $952 billion in 2025. And it paints a picture of, significant fiscal strain.
And inflation concerns haven't gone away either, have they?
Not at all. Your sources noted that Friday's PCE data is being watched very closely, seen as crucial. And they also highlighted that spreading port congestion globally, that could potentially increase shipping costs, again, maybe trigger some new inflationary pressures down the line.
Okay, so debt, yields, inflation. And then there was a policy risk element, too.
Oh, yes, the tariff news. That caused a sudden jolt. Your sources reported on U.S. President Donald Trump's proposal to raise tariffs on EU goods to 50%.
Right, and just to be clear, we're reporting on the market reaction to this policy proposal, as highlighted in the news you sent.
Exactly. The reports indicated it caused immediate disruption to market stability. Risk sentiment definitely took a hit.
But then the implementation deadline was extended.
It was, later extended to July 9th. And that seemed to help market stability recover somewhat afterwards. It was also interesting to see Japan's reaction noted in your sources.
What was that?
They apparently allocated about $6.3 billion for emergency relief, anticipating the potential impact of those tariffs, shows the real-world economic sensitivity.
Okay, so if we try and synthesize all these macro pieces, the credit concerns, the rising yields, the debt burden, inflation worries, these policy risks, what's the connection back to crypto?
Well, the suggestion from your sources is that Bitcoin's resilience, especially when you pair it with those massive institutional inflows we talked about,
Right.
it sort of reinforces this emerging role. It's being viewed, at least by some, as a diversification asset during periods of fiscal uncertainty, maybe even potentially a hedge against volatility in traditional fiat-denominated debt markets.
That narrative about Bitcoin's role evolving, it certainly seems to be gaining traction, especially with traditional finance players getting involved at this scale now.
It does seem that way.
Okay, let's switch gears slightly. Let's look at the regulatory landscape, because your sources shared some notable developments there too, particularly around stablecoin reform in the U.S.
Yes, the Genius Act.
Yeah.
That was a key piece of news, advancing in the Senate. It successfully passed a procedural vote back on May 19th. 66 to 32 was the tally.
Okay, and your sources outlined the proposed framework in that bill pretty clearly. It sounds like stablecoins would be explicitly excluded from being classified as securities or commodities. Issuance restricted to U.S. licensed entities. They'd need full backing by assets like USD or treasuries. Couldn't offer yield.
Right, no interest payments.
And there'd be a 3-year grace period for existing issuers to get compliant.
Exactly. And what's fascinating here are the potential implications that were discussed in the material.
How so?
Well, while many see this framework as a positive step, providing much-needed clarity, which could help stability and institutional adoption, others point out that these pretty stringent requirements for issuers, especially around licensing and backing, could pose significant challenges for decentralized finance, for DeFi projects that are built on stablecoins.
Ah, I see. So it highlights that classic trade-off involved in bringing regulatory clarity, especially to the decentralized parts of the ecosystem.
Precisely.
And away from the federal level, Your sources also noted some crypto-friendly moves happening at the state level.
Yeah, Florida was mentioned specifically. There's a proposed bill there aiming to eliminate the capital gains tax on Bitcoin transactions.
Interesting. So making, using, or transacting with BTC potentially more favorable within Florida.
Right. These steps, I mean, they're still evolving and they vary from place to place, but they're crucial for gradually integrating digital assets into the existing financial system, even if the path forward isn't, perfectly smooth, especially for DeFi.
Okay, let's bring it back to the market participants and specific assets now, because the picture isn't entirely uniform, is it? We talked about institutions leaning in with those massive ETF inflows, but your sources also pointed to maybe a degree of caution among retail investors.
That's right. According to one source you shared, retail trading volume actually remains below the average levels we saw over the past year.
Huh. So despite prices rising, individual investors might be, holding back? Waiting for clearer signals, maybe?
It suggests some hesitation, yeah. Which contrasts pretty sharply with the story your sources told about crypto hedge funds.
Oh, yeah. Tell us about that.
Well, one report highlighted their relatively poor performance compared to simply, holding Bitcoin since 2017.
Really? How poor?
Over that period, BTC is up over 565%. The average return for the top 100 crypto hedge funds? Less than half of that, around 272%.
Wow, that's a significant underperformance.
Yeah.
Any reasons given?
Yeah, the sources attributed this lag to a few challenges. Things like high correlation with the overall market, meaning they weren't really providing diversification.
Okay.
Altcoins not generating that sustained excitement needed for alpha. And traditional quant strategies like arbitrage or volatility plays becoming less effective in the current market.
So the takeaway seems to be that active fund management in crypto has been, pretty challenging.
Extremely challenging. It really pushes the need for adaptation, maybe shifting towards more tactical or trend-following approaches for those funds.
And it seems like retail investors might be recognizing this too, opting for the simplicity and, frankly, the lower fees of those Bitcoin ETFs instead of the higher fee, higher beta hedge funds.
That seems to be a trend, the sources noted. It definitely underscores the need for that active fund industry to evolve its strategies.
Okay, so within the altcoin market itself, beyond the hedge fund view, your sources revealed some really interesting, sometimes diverging trends among specific assets.
Yeah, absolutely. It's definitely not monolithic.
Let's dive into a few specific ones you highlighted. Ethereum, for instance, trading around $571, but your sources pointed to strong inflows into ETH products last week.
That's right, $326 million, reportedly its strongest inflow week in 15 weeks. So that clearly shows improving sentiment specifically around Ethereum itself.
And you even had a specific whale story in there.
Yeah, the smart money whale investor.
Yeah.
The notes detailed someone taking a highly leveraged long position on ETH.
How big?
15,000 ETH, worth about $38.57 million at the time, using 25x leverage.
25x leverage. Wow.
Yeah, I mean, for those unfamiliar, that means borrowing heavily to amplify potential gains, but it also dramatically increases the risk. Their liquidation price was noted at $2,441.90.
Okay, so that shows significant conviction, but also, very high stakes for that particular trader.
Definitely. Now, contrast that ETH story with XRP.
Okay.
Your sources highlighted a recent trend reversal there. XRP experienced its first outflows in 80 weeks.
First outflows in 80 weeks.
Yeah, and it was a hefty amount, minus $37.2 million. This was actually reported as the largest weekly outflow on record for XRP.
Wow. So that potentially indicates a shift in outlook or sentiment specifically for that asset.
Potentially, yes. It's a significant data point.
What about Shiba Inu?
Our SHIB showed notable resilience, according to your notes. It surged over 5% recently after dipping intraday. A sharp recovery.
Driven by volume.
Yeah, driven by volume spikes, the sources mentioned. They also pointed to roughly 1.13 million addresses holding SHIB for over a year.
Okay, suggesting some confidence from longer-term holders in that particular meme coin.
Seems so, and ADA and DOGE were also singled out briefly for leading gains among the major alts after that recent weekend dip we mentioned earlier, reflecting broader optimism returning as those trade tensions eased a bit.
Got it. And there was another whale story, this one for you and I.
Yeah, another interesting one. Your sources detailed an investor who has reportedly accumulated profits of $21.54 million from trading UNI since 2020.
Wow, nice one.
And recently saw an additional $370,000 in unrealized gains after buying a third round near $5.99, right before the price climbed up to $6.81.
So a good example of successful tactical trading playing out there.
Exactly.
Okay, and finally, under specific assets, there was an interesting divergence your sources noted with MicroStrategy, MSTR.
Yes, the MSTR situation. The analysis you provided, attributed to 10x Research, highlighted that MSTR's stock price has actually been diverging from Bitcoin's rising price recently.
Diverging how? Like underperforming Bitcoin?
Essentially, yes. They actually recommended a bearish option strategy, basically a bet that the stock price would fall significantly by the June 27th expiry.
And the reasoning.
Their analysis suggested that investor enthusiasm for MSTR, perhaps tied to the premium it often trades at compared to just holding BTC directly, might be waning, even though Bitcoin itself is strong.
Huh. That's a really interesting dynamic to watch.
It is. These specific examples really paint a picture of the varied and complex dynamics playing out within the market, beyond just the big headlines.
Definitely. Okay, beyond the price movements and asset specifics, your sources included a few other noteworthy events and, importantly, some alerts. On the corporate adoption front, you noted a Japanese company, Remix Point.
Yes, Remix Point, planning to acquire an additional 1 billion yen worth of Bitcoin.
Which brings their total investment to around $84 million US.
Roughly, yeah, about $83.98 million. So another data point showing continued corporate interest and investment in Bitcoin, extending beyond just that ETF structure we discussed.
Okay, now this next one is really important, something you absolutely need to be aware of if you're in this space. Your sources included a security alert from SlowMist.
Yes, crucial information, detailing a persistent phishing scam.
Can you walk us through how it works? Because the details are chilling.
Yeah, so it often starts with fake text messages. You might get one with a supposed withdrawal code telling you to call a specific number.
Okay, a scammer number.
Right. If you call, they trick you. They tell you there's some kind of security vulnerability with your account. Then they transfer you, supposedly, to fake hardware wallet support.
Oh, wow.
And from there, they direct you to phishing websites. These sites are designed to look legitimate, and they try to get you to enter your mnemonic phrase, your seed phrase.
And if you enter that phrase,
your funds can be stolen, even funds you think are safe in cold storage, because that phrase is the master key.
That is terrifyingly sophisticated.
It highlights the constant and, frankly, evolving threat landscape.
Yeah.
So please be vigilant. Never share your mnemonic phrase with anyone.
Never.
And don't enter it on any site you navigate to from a text message or an unsolicited call. Always verify security alerts or support requests through official channels you initiate yourself.
Protecting those private keys is just paramount.
Absolutely. Non-negotiable.
Okay. Your sources also touched on a couple of Binance announcements, just quickly.
Yeah, relatively minor in the grand scheme, but noted. The Puffers PFVS token launching May 27th with airdrop applications open, and a right-to-earn campaign running until June 30th, offering bonus WCT token vouchers for content creators who drive trading volume for the WCT-USDC pair.
Okay, so platform-specific updates, but part of the overall ecosystem news flow you were tracking. Now, just to quickly recap, something we touched on earlier, that weekend volatility. Your sources mentioned the dip triggered by those initial tariff threats.
Right. That resulted in over $500 million in long liquidations across the market, a significant flush out.
But it was followed by a pretty quick recovery, wasn't it?
It was, yeah. Sentiment seemed to stabilize fairly quickly once that deadline extension for the tariffs was announced.
And that shift in sentiment was also reflected in the options market.
Yes. Your sources noted the positioning there has moved back towards a more bullish stance, with notable buying activity seen in the September $130,000 strike Bitcoin calls.
Okay, 130K calls for September. Interesting. And looking ahead just this week, your sources flagged some key events that could influence things.
Yeah, a few things to watch. There's a speech from Fed Chair Powell, the release of the FOMC minutes from the last meeting.
Always important for macro clues.
Definitely. And then on the crypto-specific side, the Bitcoin 2025 conference and the ETHPOG conference are both kicking off.
Right, conferences can sometimes bring announcements or shift sentiment.
Exactly. They provide potential catalysts and just serve as a reminder that the market remains sensitive to both those big macroeconomic signals and these industry-specific developments.
So, bringing it all together then. After digging through all these sources, What does it all boil down to? We've covered a lot of ground here.
We really have. Yeah, we went from, specific price points and individual asset stories all the way up to major shifts in global finance, institutional flows, regulatory moves.
And have this critical security warning.
So in the security warnings, absolutely.
The key takeaways, it seems to me, are Bitcoin is riding this really significant wave of institutional capital, pushing it to new highs. While at the same time, it's clearly reacting to these major shifts happening in global finance and debt markets.
Yeah, that connection is becoming clearer.
Meanwhile, underneath that main story, altcoins are showing a much more mixed picture. Some strength, but also some struggles and divergence.
That's a good summary. And while regulatory clarity seems to be slowly progressing, at least in areas like stablecoins in the US,
Right.
your sources really reinforce that those macro risks and, unfortunately, security threats remain ever-present factors that you just have to consider in this landscape.
It's definitely a complex and rapidly evolving picture. As Bitcoin navigates these really intricate macro environments and attracts this level of institutional attention, it really makes you wonder about its fundamental role. Is it shifting? Is it moving from being seen purely as like a risk-on speculative asset towards something more, maybe a genuine diversification tool, or even, as some sources suggested, a potential hedge against instability in traditional financial systems?
That's the big question, isn't it? The one your sources seem to be grappling with. And it's a question that has really significant implications. What does that potential shift mean for your own approach to this dynamic market?
Yeah, definitely something to keep exploring as you continue to follow this space. We really hope this deep dive into the sources you shared has given you some valuable insights, helped clarify what's been happening out there.
Absolutely. Keep observing how all these interconnected factors continue to play out.